Good morning, traders. It's 8:01 a.m. Chicago time on Tuesday, the 8th of February, 2022. This is episode number 2167. Derivatives trading is not suitable for all investors. Past performance is not necessarily indicative of future results. As always, a mic check, please, just to make sure. We're going to jump right on over to the convergent trading pre-market summary sheet this morning, where we see that the market is absolutely and completely neutral. The top of my leaderboard really is the dollar on a percent basis is the dollar, and at the bottom is ETH. And so this morning, we're not seeing a commitment by traders. This is exactly what I described yesterday in terms of the market likely to be stuck in this range between 4,600 and 48, 44, 44, 40 or so, 44.20 for a little bit. And this is where we are. It's not to say that I'm right. It's to say that it's expected, and therefore we adapt to make up for that. The Ukraine-Russia situation continues. French Prime Minister, President Macron, went to Moscow to meet with Putin this morning. They had announced that there was no progress there. There are now about 130,000 soldiers, Russian soldiers surrounding Ukraine, and the expectation is that if they make a move, then there will be pretty heavy sanctions from the West against Russia, which will impact natural gas prices, or the natural gas supply, crude supply. Crude's already responding to that. And the other piece is that the market is waiting for the U.S. CPI, which comes out on Thursday. Very, very important release this time. So that's where we are. Pre-market, we had Pfizer, Cisco, and others. And then after the market, the key releases, America Mobile, and Omni, Chipotle, and also others. Today on the calendar, there's really nothing significant until the Australian Westpac consumer confidence number, which comes out at 6:30 p.m. Eastern U.S. time, and so that's that. You can see crude's off 140 basis points. Crude's created a top. It is rolling over. Crude's top is above $93, so it's come off a fair amount so far. Yesterday was a pretty balanced day. Relatively scalpy trade in there yesterday. So as far as the ES has volume that's pretty much in line with expectations. $150,000 by 9 a.m. Eastern U.S. time is the expectation. And we're at 177. The overnight inventory is completely balanced. We've been winding ourselves around the prior day's settlement, which was 44.75.75, and it's currently trading at 44.73. We have a beautifully Gaussian profile. Those of you who are a convergent saw the post that I made in there. Completely balanced, nice fat profile. The range is pretty decent, 33 and a quarter. That's above the mode of 23.5 points for the overnight session. And the point of control is at 44.78. We're shifting the point of control down slightly versus the prior session so far. We'll see how it goes once the market opens. But the position of the market is really neutral coming in this morning, and that's where we stand. Yesterday, this is where we got scenario 2. Scenario 2 is looking for a test into the prior high, the 45.08, the overnight high of 45.08, and then the 45.15 marked right here. And that was expected to be the high on scenario 2. And then It was expected to fall through down to around 55. See right here, 55. That was scenario two. Scenario one was looking for a push to 25 and then failure. In either case, we're looking for it to not be able to test that 35 again. 35 is really, really important currently. It's kind of like the over underline on the daily, and so it did not accomplish that at all. What it did accomplish is scenario two almost to a T. We went to 13, pushed down. We went neutral. We broke the IB high. You could see. Let me turn this off. You could see it just pushed through and it fell right back, impulsive move back, and then it extended to the downside. So now we've tested above the first hour's range, then below the first hour's range, then above the first hour's range to 1450. If you recall, 15 was expected to be the top for scenario two. Again, 15 is a stock zone level from last Thursday or Wednesday. And then it just completely gives it up. I wasn't here for this, unfortunately, but it pushed all the way to the other side to 62.75. We were expecting it down at 55 if we were to stick to the sell side ranges, daily ranges. We would have expected it down at 55. But it got pretty good range yesterday. We did about 51.75 points, 52 points or so, in a profile that was kind of multi-distribution. We had a lot of fighting top and bottom. So yesterday I warned coming in to just sit back. Yesterday's a great day to sit back. I warned that where we're opening, where we are in the context, where we are in the bigger picture, and I walked through the steps so that you can come to the same conclusion, hopefully. Not that I'm always right, but the idea is to just step off the gas yesterday and wait for the market to tell us which side is making progress price-wise, which was not expected at all, and that's what we got. You would like trading this stuff in here? Be my guest, but this is, to me, this is just, I'm saving you money by telling you not to get involved and to look elsewhere, or like I said, in the Convergent Trading Head Trader channel. Like I said, it's a good day to update studies, catch up on your log, and so on. I did a couple of studies yesterday on the New York Stock Exchange breadth, or also known as advances minus decliners, and got some statistics off of that I shared in the chat room. But other than that, really no trades. I'm also on an hour and a half to 2.5 hours of sleep every night. Still, this baby's just not sleeping through the night, this newborn. So I'm exercising. I'm putting my money where my mouth is, or I'm doing what I'm saying, in that when there is a life change, it's really important to recognize that despite the fact that you might think that you're performing at a normal level, you're actually not. It's very difficult too. It's like drunk driving. You think, your brain tells you that you've got it under control, but the fact is you're weaving all over the road and are a danger to yourself and everybody else. So trading's kind of the same way. When you have a life change, you got to pull back. So lots of MES trading, and being picky and just staying. My goal right now is just to stay in the game, stay with the narrative, keep up with what the market is doing, because that's what's key. The holy grail, and I have a thread on my Twitter, by the way, if you haven't seen it, twitter.com/futurestrader71. There's a pinned thread. I would love for you, all of you, to read it and retweet it, hopefully. And it talks about, risk coming first, having a reason for a trade, and understanding that you can only control risk, really. That's the only thing you can control. Everything else is random. And so the other piece of this is the narrative. My understanding of what the market is doing and how the story is unfolding is giving me the edge to be confident talking to you and to put on the trades when they show up. So it's very important for me to stay up to speed rather than take the time off and not look at the market at all. So this is what we were presented with yesterday. The delta was positive despite the sideways action in here. You can see the delta was positive all the way. It came back to zero, even though we were well below the open, so it should be below zero. It remained positive throughout the session. So there's aggressor buyers in here. Aggressor buyers in here. I could see them on the tape. Whenever lifting occurred, every time it dropped, you could see these little sharp retractions. Every time it would drop, it would go up very, very quickly. You see these spikes higher. It's grind down, grind down, grind down. And then, so we got spikes on the close, but early on, we would grind down, spike up right here. Grind down, spike up. So there's some buying interest there. That could be hedging. That could be hedging on short positions elsewhere. Could be a lot of things. But the delta is saying that there's a lot of interest on the buy side. And this grind lower was very long. Look at how big that rotation is. I mean, it did have 40 points of range, but that rotation took a long time in a sustained way without pullbacks for it to form that way. There's no change in my perspective on what the market has done. So here's the bigger picture. Let's get rid of everything but the profiles. Here's the bigger picture, and you can see that, the prior session, Friday, right here, you could see that yesterday was exactly as anticipated, holding in between these two big areas right in here. And then today it has a bit of a slouch to it. We've moved the point of control lower. We've pushed a little bit lower than the prior day's range here. We have a selling skew following yesterday's selling, but I'm still not convinced. I'm still expecting this thing to kind of hold the range here. There's nothing to price in until CPI or until war breaks out, or if war breaks out. Hopefully nothing will happen there. The loss of life will be tremendous. Unless something dramatic comes in, we don't have anything to reprice. That's where we stand currently. Okay, so let's move on and take a look at what's expected for today. Okay, so what are we looking at for today? So we are opening near the lower end of yesterday's range. We hit 62.75. The low overnight, 2 ticks above that, 63.25. The overnight inventory is completely flat. It's even. So I'm not looking for a strong rebalance. I'm not looking for the market to be off sides by a lot. So the expectation is, again, an open chop, a choppy open, a pullback to the overnight point of control and settle, because we have some stats there. So I'm expecting that, but overall, I'm looking for this thing to break this 62.75 area from yesterday and to start making its way down through the 55 into the 42, and then all the way down to this next key area at 44.20 right down here. So this is the 20, and then we're looking at 78 up here. Okay, so these are the two areas, and that gives us about 50 points of range, which is relatively expected. So sell off, bounce, and this is still within that wide. Even if we sell off this morning, it's still within that wide balance range. So day to day, it may look like we're breaking out, but if you look at the bigger picture, if you look at the profile, it really is still stuck in a wider range. So don't get too excited. Just trade what you see. The secondary is an open auction that tests below, finds its buyers. So we would have an impulse higher back into the overnight point of control and settle, and then start pushing back to that 4,500 and the big MC in the area, which is 4505. Retest 4505, consolidate up here and hold steady. So we end up with a lower low and potentially a higher high, but more likely a lower low, lower high as the trend continues. The daily one-time framing continues down. So those are the two key scenarios. Again, up here we have 15, 1505, and then the big one, as you have already guessed, 35 as the key area. So that's really the map. The map is 4042 down here, 4042, and then 63. So that's the map below. 63, 40, 42, 40, 20. Map above, 05, 15, 35. Those are the main areas that we're looking for reactions at or to target. And we'll see where we are. The VWAP is above us right now. The mid is above us. So I'm expecting some sort of push towards that on the open. We'll see how that goes. Good luck today, and I'll catch you tomorrow morning. Take care.